Hi everyone, welcome back to the PBWM Hot Seat. This is the first episode for the year, and I really hope you enjoyed some of the episode that we did last year. And since this is the first one, we are going to be taking a level up and answering one basic question that we have in the industry, which is, do private banks have a role in the future? Because we see certain fundamental shifts in the industry, and we thought this is a good opener and opening video to start off with. With me to unpack this, we have with me Thomas. Thomas heads our global banking practice and has been working on very similar and interesting topics with all his clients. Thomas, great to have you back on board.
Thank you very much, Prasanna. It's a pleasure again to be here for the second year. And yes, it's quite a fundamental question that you put out there, right? And challenging the role of a private bank in the future. So I would say let's dive into it.
The reason why I asked this fundamental question is if you look at some of the forces that's happening. External asset managers and independent advisors market has been traditionally or increasing quite a bit, which means the client ownership is slowly and steadily is just not with the banks, but it's starting to diversify more. If you look at the fundamental functioning of banks, which used to be on settlement, which used to be on operations, many of these things are now being commoditized, custody and so on. And with technology, it's even accelerating. If you look at the third aspect of it, which is balance sheet, that's where things get even more interesting with private credit. Private credit market is already 1 to 2 trillion globally. And this means that there is an alternative path from when it comes to balance sheet, when it comes to lending, and it's just not banks that have a monopoly or the fundamental right over it. And the last one is if you look at cash and distribution, even that's fundamentally changing. So you have stable coins, you have tokenization, you have several mechanisms by which even the fundamental ways of how cash gets managed is different. So in an extreme scenario, clients the ownership goes away from the banks, everything else gets commoditized, and there are alternatives. So what does bank become? Bank still may exist, but as a utility that is taking care of really regulated business, but it's fundamentally different compared to what they do today. And that's more the driver of me mentioning, I think, it's probably the right time for us to define what the role would be of private banks.
Indeed, a very extreme case you're describing there, Prasanna. Let me share my views and put that potentially a bit more in a balanced perspective, right? So let's start with the first point. I think complexity that you mentioned also before keeps banks, and especially private banks, structurally relevant. Clients need these big balance sheet capabilities that private banks have. They need cross-border support. They need handling of complex regulatory situations, and that's something a private bank can offer and will be offering in the future. Second point, the market is growing. So the total pool of wealth is still increasing on a global scale, and also the revenue models that are attached to it, when you look at private banks, they're also growing, right? They're not breaking, they're not changing drastically. Yes, they're adapting, but the whole pool of wealth and the clients within, they're still growing. And I would say even the large private banks, when you look at that as a result, they're also still growing. So putting that a bit more in perspective, I see it more balanced than you, but still it's a very relevant question that you're bringing up. So from my point of view, in a realistic scenario, in the private banking wealth management market, there will be a concentration. So you need to pick and choose better than in the past. And I think that's something that in the next section we'll discuss about, right? So the successful private bank of the future will have to radically focus on advice, on orchestrating and industrialization. And I think that's going to be key for a private bank to be successful in the future.
Thanks so much for bringing in the balance. I know it was an extreme view. I'm sure truth is always in the middle. So if I heard you correctly, so the answer is not, does private bank have a role in the future? I think the question actually becomes, what role does each private bank play as its role in the future, right? So that involves, I suppose, a lot more deeper questioning towards positioning. What clients do they serve? What service do they provide? Is it more advice, as you mentioned? Is it more infrastructure? Is it more regulatory or complex advice, right? So, and what is the cost to serve? Can they actually do it consistently, but also the price? Most importantly, what we shouldn't forget, I'm sure we'll go through this in the conversation, is competition. Whom are they actually competing with? depending on the service that they try to actually offer, right? So to me, those are probably the dynamics that will eventually define and hopefully answer some of the questions that we are trying to explore, which is what exactly is the role that private banks will play in the future.
Yeah, and here I see exactly the challenge, right? Many banks struggle to find that right positioning, right? They try to do everything at once. And with this, like you, as you said, right, you increase your cost block that you run on, right? You decrease efficiencies, and your positioning and differentiation gets very blurry or is not existing at all. And I think that's exactly what a private bank of the future needs to think about.
So this means, to take this further, private banking is not one single business, right? So if you talk about the simpler ones, simpler advice, they're actually competing with the wealth techs and the robo-advisors of the world. If they talk about then the complex ones, potentially they are competing with the EAMs and the multifamily offices and the family offices of the world, right? And take this also to the infrastructure level. They are competing with the custodians and the infrastructure providers. So across all the three chains, depending on what is that they're trying to do, they are facing different market forces. So that's exactly where I believe the strategy is probably not, it's not the strategy, but it's more the service promise that you actually offer, and does your business model and the cost to serve actually meet those? That probably might be the more fundamental question that we're trying to answer.
Yeah, and fully concur with you on this one, right? The biggest risk for me is like, not choosing the wrong strategy, but kind of now choosing the right strategic direction. As you said, there is additional players entering the market, you have more competition, and if you're trying to run multiple of those strategic initiatives at the same time, again, your positioning and also your profits and your results are going to be substandard. Do you think that's going to impact everyone in the same way?
No, absolutely not. So maybe why don't we then peel layer by layer, right? So let's take a look at the larger private banks. Global presence, complex structures, they're able to service their clients globally, right? So if you look at them, they're actually placed at an extremely advantageous position because they are systemic. They can handle the complexities that many of these alternatives are not able to handle. At the same time, regulatory focus-wise, given also the complexity, they will exist. So the main thing that they can do is to optimize the cost to serve.
Yeah. And what shouldn't they do?
That's a very interesting question. So if you look at their target segment where they add value the most, it's the higher end of the high net worth and the ultra high net worth where the complexity actually exists. If you start to go slightly lower, your competition is completely different. You're talking about wealth techs in different markets. If you go into the affluent side of things, depending on maybe you have one or the other domestic market where you can be successful, but if you take affluent as a core strategy, you're competing with a completely different market, and that might even turn out to be a distraction or an investment that may not be worth the returns.
So would that then be an opportunity for someone else to tackle that market?
Brilliant question. So, and there, that's where it becomes interesting, right? So that's where you get to the slightly lower end of the client needs, which is affluent going towards mass affluent. I would still not, I think there is still a bit of wiggle room in terms of how the segment plays out, because slightly higher end of the mass affluent, there is still complexity. Roughly the wealth is around 2 to 20 million USD in terms of investable assets. There, I sincerely believe, even more than the private banks, the larger ones, some of the regional ones, some of the ones that have also a domestic presence could play a substantially great role because they slightly add more complexity into their advisory business. They are able to cater to this market. They're able to deal with some of the smaller life changes or entrepreneurial changes that happen in their client's life, and they're still able to meet the needs until they're no longer able to serve the complexity.
And what about these, we're here in Switzerland now, I'm based in Switzerland, and we have this really long-standing traditions of private banks here in Switzerland. What should a traditional private bank in Switzerland, a smaller player that doesn't have the global reach, what should they do?
Traditionally, they've grown based on the traditional strengths of the industry, which I think now has been fundamentally challenged for several years now. Key for them is to pick their niche. And the niche could be very different. private bank to a private bank. Niche could be a specific type of client segment, specific market, or specific things that they're known for in terms of what they're good at in servicing. Or in the other extreme, they could also industrialize themselves, which means they end up serving even the advisory or the external asset manager market, independent advisor market, because they know the back end and the entire infrastructure and a global infrastructure that potentially can be activated depending on what the EM is actually focusing on. So such partnerships may industrialize the cost and save the costs, but at the same time offer them the upper part of the value chain that allows them access to the market. So different strategies, but to me what's forcing them is they have to really focus.
So you were talking about niche before, and what kind of niche do you see for the wealth techs in that space? Wealth
techs till now have been very country or regional focused. And there they compete directly with the regional players or the local players for assets, for traditional investments. And why they have been successful in doing that? Because they are rather very simple, more outcome-oriented, goal-oriented, and they don't have tons of products that they push towards their clients. So the wealth techs have been growing because of their simplicity, transparency, because of their cost structures and outcome that they deliver. There, I think that's also a space that I believe that regional banks and also the local ones can really do much better if they cut down the complexity towards the end client. And that's where you're talking about really the mass affluent side of things. It's not you're not talking about the higher end of the affluent segment, but really the mass affluent. Their needs are very, very simple, right? They don't have cross-border complexity. They are looking to satisfy certain goals in terms of their financial goals, and they look for transparency, simplicity, and advice and outcome that can be easily measured. There, I believe if the banking offerings are able to cater to the needs in a bit more simpler way, that probably can already unlock the asset that's flowing back to the wealth techs. The wealth techs have also matured over time and they've also upped their game in terms of their offering. So that's going to be an interesting battlefield to see how it pans out.
Interesting dynamics. So let's bring that all together and go back to the initial questions we asked, right? Does private banking have a role in the future? What is your conclusion now?
It does have a role in the future, but the role that every bank plays might potentially be different depending on exactly what they are trying to target. And it's going to be rather focused.
Yeah.
And I think the ones that are not focused or do not have things that are not defined clearly, that part of the business will be too painful to contain and will likely disappear. So.
Yeah, and I think now with this, I can fully concur, right? It needs to be explicit. It needs to be explicit about who you want to serve and how you want to do that, being aware of your role that you want to play in. So with that, I also concur with your view on the role of private banks in the future.
Brilliant, Thomas. Thanks a lot. With that, I guess we can probably conclude the section of the video. And going back to the audience, hope you enjoyed the starting segment that we'll be publishing for the year. There'll be more to come. So if you have certain ideas, feedback, and like to share your thoughts, very welcome to get all of your comments. Thanks a lot for listening in.